Why this moment matters. Right now, XRP is hovering around $2.13. XLM is trading at approximately 24 cents. XDC sits just under $0.059, and HBAR is moving around $0.145. To the untrained eye, these numbers might look like ordinary crypto fluctuation. But what most investors don't see, and what you're about to understand, is that these aren't just price points. They're signals. Because this moment isn't just another price update. It's not a recycled crypto is the future speech. If you're holding XRP, XLM, XDC, or HBAR, this moment is absolutely crucial, and what you do over the next few months could make or break your portfolio. Why? Because each of these assets isn't just another coin. They are infrastructure tokens, deeply embedded in the systems that are actively being built for the next evolution of finance. We're talking about regulation finally catching up and favoring compliant, utility-driven blockchains. Real enterprise use cases going live, not someday but now. The infrastructure behind the scenes, bridging traditional finance and blockchain, getting activated at scale by major institutions. You're going to see how these coins are no longer speculation. They're becoming the pipes of the future financial system. So in this deep dive, we're covering what's happening with the markets, which real-world deployments are already live, what risks are still in play, the upcoming catalysts you need to know about, and most importantly, how to position yourself before the next phase kicks off. Get ready because the window to be early is closing fast. Macro shifts and regulatory pressure. Let's start with the big picture because before we talk charts, price action, or adoption metrics, we need to look at the global chessboard. And right now, the board is shifting in ways most retail investors are completely ignoring. We're witnessing the most important convergence of regulation, monetary infrastructure, and blockchain policy in the last decade. And it's not speculative anymore. It's happening in real time. U.S. Senate moves forward on stablecoin legislation. Just weeks ago, the U.S. Senate quietly passed a landmark stablecoin framework bill. While the headlines barely scratched the surface, this was a game-changer. The bill gives federally regulated financial institutions the green light to issue and transact with compliant stablecoins. Translation: we just crossed the line between crypto being tolerated and crypto becoming embedded in the financial system. This directly impacts infrastructure tokens like XRP, XLM, XDC, and HBAR, because these are the rails that enterprise-grade payments, settlement systems, and asset tokenization will flow through. We're talking about bank-backed dollar-pegged tokens settling cross-border in seconds using XRP or XLM. We're talking real-time invoice financing or document authentication using Hedera and XDC in a fully legal environment. And it doesn't stop there. European Union Europe's regulatory flip. The ECB's crypto reversal. Over in Europe, the European Central Bank, the same institution that once warned crypto was a systemic risk to monetary sovereignty, has completely flipped its tone. In their latest public statements and working papers, they've openly acknowledged the potential of blockchain-based payment rails. Not as a future idea, as an urgent modernization priority. Why the change? Because the financial infrastructure in Europe is aging. SEPA transfers are slow. Cross-border remittances are expensive. And meanwhile, RippleNet and Stellar-based corridors are quietly proving they can do it better, faster, and cheaper, compliantly. The ECB is now signaling what used to be unthinkable. That regulated crypto infrastructure might be the backbone of future European payments. This directly boosts the legitimacy of XRP and XLM, and by extension XDC and HBAR, which are built with the same permissioned compliance-first ethos. IMF, World Bank, and tokenized CBDCs. If that wasn't enough, the IMF and World Bank have also accelerated their pilot programs, testing out tokenized central bank digital currencies, CBDCs, that can interoperate with private networks. Let that sink in. The biggest financial institutions in the world are not just talking about digital currencies. They're testing them on networks like RippleNet and Stellar. And it's not a conspiracy theory or a hopeful investor's tweet. It's an official documentation and IMF briefings. These are real pilots with real capital and real policy teams involved. This is the exact scenario that Ripple and Stellar have been building for over a decade. Why this changes everything for your portfolio. So why should you care as a holder of XRP, XLM, XDC, or HBAR? Because this isn't about hype anymore. It's about policy alignment and infrastructure readiness. The world's most powerful regulators are no longer asking if crypto infrastructure matters. They're now deciding who gets to power it. And here's where it gets real. Regulation doesn't reward everyone equally. The age of permissionless anything goes is ending. Only the tokens and networks that are enterprise-ready, regulator-approved, and legally deployable will capture the trillion-dollar flows coming in. XRP already has a partial legal victory in the U.S. courts, allowing it to be used by institutions. XLM is operating stablecoin corridors with Sorobon smart contracts and Paxos-issued assets. XDC is powering enterprise-grade trade finance with ISO 20022 compliance baked in. HBAR is trusted by IBM, Google Cloud, and the U.S. Navy not just for marketing, but for real operational use. The key here is regulatory survival. The networks that survive this regulatory firestorm will inherit the future of money. The rest? Vapor. What comes next and why it matters now? This is where the crucial part comes in. Every week from here forward, we're going to see more public-private partnerships announced, more clarity and enforcement from global regulators, more adoption pilots going live behind the scenes. And as that happens, the divergence begins. Tokens that are aligned with regulation will surge. Tokens that aren't will get delisted, debanked, and disappear from serious portfolios. That's not FUD. That's the path crypto is on. So if you're holding XRP, XLM, XDC, or HBAR, this is your moment of positioning. Because the world's infrastructure is being redesigned as we speak. And if you're holding the right rails before that switch flips, you're not just holding coins, you're holding leverage on the next financial system. XRP ETF odds, liquidity engine, and enterprise traction. Let's break down XRP, the asset that's no longer just fighting for survival, but rapidly positioning itself as the backbone of institutional-grade cross-border finance. Current price, $2.13. Short-term target resistance, $2.70. Long-term projection, post-ETF $5 to $14 based on ETF-fueled institutional flows. XRP's setup right now isn't just bullish. It's structurally explosive. Here's what's happening. First, Bloomberg ETF analysts have assigned a 95% likelihood that an XRP Spot ETF will be approved by Q4 2025. That's not a rumor. That's from the same analysts who accurately called Bitcoin and Ethereum ETF timelines. This would make XRP the first altcoin outside ETH to receive an institutional-grade ETF. And that opens the door to capital from pension funds, sovereign wealth desks, RIAs, and traditional hedge funds who have been waiting legally to deploy. But the ETF isn't just about price speculation. It's about validation. And that validation is coming at the exact same time that Ripple's on-demand liquidity ODL solution is hitting record-high volumes globally. The corridors between Latin America and Southeast Asia are now fully live, settling transactions in seconds with full transparency and compliance. Banks, fintechs, and FX providers are actively routing payments through RippleNet using XRP as the bridge asset. That's not hypothetical utility. That's real-world demand. And here's the kicker. Institutions can now legally hold XRP. The SEC ruling in 2024, which labeled XRP not a security when sold on secondary markets, gave a green light that retail barely paid attention to. But institutions noticed. Custodians like Anchorage, BitGo, and Standard Custody are now offering regulated XRP holding services. This is the biggest shift in XRP's history. For years, XRP was the lawsuit coin. Now, it's the only major altcoin with legal clarity in the US. The narrative has moved from, will XRP survive the SEC? To, XRP survived, and now the gates are open. What to watch next? SEC clarity ripple effects. Expect XRP's legal status to trigger reevaluations of dozens of other altcoins. But none of them are as battle-tested as XRP. This gives XRP a first-mover advantage in regulated markets. Grayscale and BlackRock product filings. We're already seeing whispers of Grayscale XRP Trust and BlackRock XRP ETF filings being drafted. If even one of these clears the SEC, XRP demand from institutional desks could explode. FX partnerships scaling hard. Tranglo, SBI Remit, and other partners are scaling their integrations. Tranglo alone has routed over $1 billion in ODL transactions since going live. SBI is launching XRP-powered payment apps across Asia. XRP Ledger ecosystem growth. New DeFi and tokenization projects are launching directly on XRPL, including stablecoins and RWA platforms. With hooks and AMMs going live, XRPL isn't just payment rails, it's becoming a full financial stack. Why this section is crucial. This is the first time in XRP's history where regulatory clarity, utility, and institutional access have all aligned. The pressure is building. The infrastructure is ready. And once the ETF domino falls, the capital floodgates open. If you're already holding XRP, you're early. If you're not positioned correctly, you're exposed. Because XRP isn't fighting anymore. It's winning. And the question now isn't if it runs. It's how high and how fast. Stellar, XLM. From dormant to deployment. For years, Stellar felt like the forgotten sibling. But quietly, something shifted. Current price, $0.24. Target resistance, 30 cents short-term / 70 cents long-term. What changed? Palago Labs, an enterprise DeFi firm built on Stellar, just launched tokenized trade finance pilots with South Korean and European banks. Paxos is now issuing USD stablecoins on Stellar. UNDP and Mercy Corps are running humanitarian aid pilots on Stellar rails. MoneyGram access allows on/off-ramping globally using Stellar USDC. This isn't speculation. It's real deployment of DeFi plus FX plus aid, all through XLM's rails. The smart contracts layer, Soroban, is also live on mainnet. It's lightweight, efficient, and focused on compliant dApps. The result? More than $50 million of USDC has already moved through Stellar in the past 30 days. XDC Network, the trade finance Trojan horse. You're probably not hearing about XDC on Twitter, but that's exactly why it matters. This isn't retail hype. This is enterprise finance infrastructure, and it's starting to come online. Current price, $0.058. Target range, 10 to 22 cents over next 12 months. Recent developments. XDC is the native token of the TradeFinix protocol, now adopted by institutions in Singapore, India, and UAE. It's the core settlement layer for tokenized invoices, letters of credit, and real-world asset financing. Major custody providers, e.g. Fireblocks, Copper, now support XDC. XDC Foundation just announced 8 institutional pilot programs focused on RWA tokenization. What's the play? XDC is not a hype coin. It's a patient investor's dream. If trade finance tokenization scales, XDC becomes the rails. Watch this space. It's being built under the radar. HBAR, innovation amid volatility. Hedera HBAR has always been different. With its hashgraph consensus mechanism and governing council of global giants, HBAR is like a startup plugged directly into the Fortune 500. Current price, $0.145. Near-term volatility, high. Long-term potential, 40 cents to $1.20 range if enterprise dApp scale. What to know? The Australian CBDC pilot used Hedera for carbon credit settlement. Dell, IBM, Google, Boeing, LG are part of Hedera's governance. AI plus IoT dApps are now being prototyped using Hedera's high-throughput design. But there are risks. Token supply inflation is still a concern. Technical signals, death cross, low RSI, suggest short-term downside. Ecosystem usage is strong, but not yet reflected in price. Play it smart. HBAR is one of the few altcoins with real enterprise velocity, but you'll need to manage volatility. Portfolio positioning strategy. So how do you position? Here's a tiered risk-adjusted framework. High conviction, long-term core XRP, XLM. Growth allocation, emerging scale XDC. Speculative innovation play, HBAR. Capital allocation idea example. XRP, 35%. XLM, 30%. XDC 20%, HBAR 15%. Tactical rules. Take profits at 2x moves, recycle into core tokens. Use stablecoins as hedge anchors. Track macro signals. Fed policy, global tension, ETF timelines. Journal entries every 2 weeks to track reasoning versus outcome. Final section. The moment of clarity. This isn't 2021. There's no room left for hype-only plays. If you're holding XRP, XLM, XDC, and HBAR, this is your window. The infrastructure is going live. The institutions are coming in. The regulations are aligning. The upside from here won't be random pumps. It will come from real value creation. So, stay informed, stay positioned, and don't sleep on what you're holding. Subscribe to Be Crypto Smart for more sharp, no-fluff insights. Because this next cycle is about who actually understands what's coming.